Hello, everybody. Welcome to another video. Now, I know it's been a long ass time, and I just realized every single time I make a video, I'm always saying it's been a long ass time because it's kind of true in a way. I really don't make videos frequently enough for you guys. But I thought about making this video, as I mentioned in the Telegram group, about turtle soup. As cringe as it is for me to say it, I hate using the word turtle soup because it's someone else's work. But I see that a lot of people are willing to pay exorbitant amounts to learn something that's super basic. Okay, you might as your money is literally even more worth it if you spent it on learning the fractal framework. Plug. But anyways, apart from that, this is going to be a concise explanation of what turtle soup is and how you can actually go about doing it. I'll throw in a few examples or two as well. Okay. Now, turtle soup requires some measure of prerequisites. Yeah. You must understand that the perfect or even semi-perfect candidate for a turtle soup scenario is a high liquidity dealing range. Now, a high liquidity dealing range, as you all know, right? It's a range of price with more than 3 changes in the state of delivery. Yep. Additionally, it is vital to actually understand what liquidity is. Liquidity is not just any high or low in price like all these idiots. I'm sorry, idiots. Actually, I'm not sorry. All these idiots on YouTube are talking about. Yeah, yes. They can cherry pick the highs and lows, get lucky once in a while. But this is something that I'm showing you guys on a daily basis using my concepts as shown in the free Discord server called My Traders Lab. Yeah, so link is in the description below. You can join there. You can check it out. I call price moves every single day. I call the bias every single day, although that is going to stop. I will talk about that towards the end of the video. Okay. Now you can learn more about stack liquidity pools in my Instagram, on my Instagram, Prince of Bob, that's my company Instagram, or on my YouTube, although I'm not sure if I have made a video on that. I know I can check now and edit this and talk to you guys about it, but I'm not bothered. Right. So a high liquidity dealing range, as you all know, is a dealing range, right? Like I mentioned, which has three or more changes in the state of delivery. That means something like this, right? So that's one order block, two order block, three order block. That makes this high and that makes this low, a high liquidity dealing range. So if price takes out this high, then you can look for a change in the state of delivery to take a sell until this low. Okay, it's fractal. It happens on every time frame. Every single day, price is booked in this manner because a rate of a high liquidity dealing range is what starts or what kicks off a buy program or a sell program. Okay. Now, it is also important for you to understand gaps or imbalances. Yeah. So now if you are an astute student of ICT or myself, you will understand that price is delivered to or from gaps and to or from stacked liquidity pools. So there are only two ways of price being delivered and one way of viewing this delivery with the highest degree of precision. Now, why am I saying one way? Because my fractal framework is the best possible way out there to view price action or the delivery of price. I'm seeing a lot of people say, no, no one should shit on this, no one should shit on that. Well, here's the thing. There's only ICT's way, and then there's my way. Why am I saying that? Because I'm the only one in this industry who is doing something special. Everyone else out there, what are they doing? Simply regurgitating, rebranding ICT's core content. So technically speaking, all these other guys out there, they're talking about ICT, but I'm talking about something completely different. Stuff that you can't even do with ICT's content. That's what I'm doing. Okay. Now, the highest probability scenarios are as follows. Yeah. If you are looking for a bullish scenario, you are looking for price to raid stacked sell side, go into a higher time frame fair value gap, a bullish fair value gap, and then you're going to get the entry. Okay. The other way, of course, the bearish approach is to take out a stacked buy side liquidity pool, go into a fair value gap on the M15 and above. If you have no choice, then sure, you can use a 10-minute, 5-minute, but you would always want to go from the daily 4-hour, 1-hour, 30-minute, and 15-minute. Okay. They want to see price react, change state of delivery, and then sell. This happens every single day. Okay, now you can use this idea with my bias generator as well, also known as Zoro. Okay, now every single one of these signatures in price, they must occur inside of the correct time of day. Now, the correct time of day is the major sessions. Yeah. Now, there are a lot of people with different ideas about what the correct time of day is. Everyone is wrong. It is not 7:30. The day does not start at 7:30. The day does not start at 8. Asian session does not finish at 12. The New York session does not start at 7. It does not even start at 8:30. Okay. The day starts at 6 p.m. Eastern Standard Time. The London session starts at 2 a.m. Eastern Standard Time. The New York session starts at 7:30 a.m. Eastern Standard Time. And the PM session starts at 1 p.m. Eastern Standard Time. Okay, that's all there is that you need to know. Now you can be like, okay, sure. Why are you not putting yourself in the group of people that are giving basically different pieces of information? Well, I've got concepts that work amazingly with this. And if it's going to be working amazingly now, it's going to keep on working amazingly in the future. Whereas if you use the major sessions that everyone else is giving, you're going to be stuck. You're not going to find moves. And then you attribute that to every day. It's not a trading day, while my friends, every day is a goddamn trading day. Okay. Now, lucky for you, you have access to my bias generator, also known as Zoro, for each of the major sessions. Now, the link is down in the description below. Okay, you must sign up. You'll get a 14-day free trial. You can see how it works out. And if you like it, you can go ahead and subscribe to it. Okay, but what it's actually doing is it's giving you literally 90 to 100% accuracy on bias for each session. I'd say from London, New York, and PM session. It's going to give you the bias for all of these guys. And all you have to do is just know how to enter. Simple. Go watch any damn ICT video, learn how to enter, get the bias from my bias generator, and then simply buy and simply sell. Make money, go to sleep, repeat, rinse and repeat, rather. Okay. All right. Now just take a look at this, a visual example. In this example, you can see that there's a 4-hour fair value gap. Now, why am I saying that this is a fair value gap? Because this goes against what I consider to actually be a fair value gap. See this wick here? On the lower time frame, that wick is a down close candle. Yeah. So I require on either side, for it to be a fair value gap, I require on either side there to be a opposite candle, opposite direction candle. In this case, this wick symbolizes a down close. That is why this is a fair value gap. Okay. Now, this low, you can see it here. That is your high liquidity dealing range low, and this high is your high liquidity dealing range high. Why? Consider the facts. We have a high over here and we have a low over here. In between, can you see how we had so many changes in the state of delivery, right? Here, and then here, here. So many changes in the state of delivery. So when price finally dumped here, it triggered so many stop loss orders, providing liquidity to the marketplace inside of a fair value gap. Well, if you understand that the market moves by rebalancing all gaps or going back into an imbalance, filling it up, and then reversing, well, when the market is flooded by tons of liquidity, basically a massive liquidity pool, what's going to happen? An entity or a group of entities are going to buy that shit up and pump price. All you have to do is simply know how to enter, and boom, you're good to go. Okay. Now, if you consider the entry over here, right? Can you see if you just drop down to the 1-minute chart on gold, we took out stack sell side here, right? This becomes a breaker. Why? Because a breaker is not simply this, right? This is not a breaker. This is not a breaker. No, it's not, right? A breaker is a failed fair value gap. Sorry, my bad. A failed order block. What's this here? A gap. This up close goes into a gap. Okay. See how this up close bearish order block, how it was used up over here. So if it was used up earlier to go down inside of bearish order flow, then once this breaks, it's going to act as support because that is a breaker. Like ICT says, it breaks the backs of those that went short. Okay, by not allowing them to go short anymore from that reference point. In fact, when people are trying to go short over here, it provides more liquidity to go long. All right. Now consider the same idea here. What's this? A mitigation block. How? Look, low, high, high, low, right? When we break up, refer to what's happening over here. Can you see how there's a bearish order block? The bearish order block was used up over here. It was an old area of redistribution or other distribution. So if you were watching my YouTube channel, if you're watching all my YouTube videos, if you are not one of those idiots that just scroll past, not watching the entire thing, then I feel sorry for you. I mean, if you are one of those idiots, I feel sorry for you. If you do actually watch these videos up to the very end, then kudos to you. You're going to do really well in trading. Trust me on that, especially with ICT concepts, right? You will understand that an old area of redistribution becomes a new area of reaccumulation. All ICT's concepts are, right, apart from the fair value gap, is the idea of all reaccumulation used to redistribute and all redistribution used to reaccumulate. This is it. Boom. This is your logical terminus. That is how it works. That is how it always works. Please do not pay even $222, even $102,000. You won't pay for shit that you can learn by yourself. As for my mentorship, you will never be able to find information from my mentorship anywhere else because everyone else is wrong about the doubling theory. I'm the only one that's right about it. Maybe ICT also. I don't know if he uses it the way I do it, or the way I use it. Now you're going to say, oh, this guy has this ego, this big ego. Fuck you. I don't care. Okay, I know what works for me and I know what works for my students, and they're doing really well. So 2 spots available for March, right? I got a student who is funded in a week after learning everything. I got students that tell me that their eyes have opened up, especially since I taught them my fractal dealing ranges and how to read new sentiment. Okay, so I had 2 spots available for March. You can sign up in the description down below. I'm sure there's a link down in the description below. I'll put one up there. And the bias generator sign up is also available down in the description below for you to get the bias for each major session. Forget Asia, just London, New York, and a PM session. Okay, so I'm going to show you guys one more example. I take you to Safari, to TradingView, right? And look at this. Look at Bitcoin, right? On Bitcoin, if you consider this low, and if you consider this high, what happened? This high and this low, that's a high liquidity dealing range. How do I know that? Look carefully. Okay, look very, very, very carefully. You will see that we have a stop hunt here, and price goes below this candle, making it a rejection block. That is CSD number 1. That's your change of state number 1. Here, order block, or rather rejection block here. That is CSD number 2. Now, all we need is one more, and this entire range is classified as a high liquidity dealing range. Okay, so let's find one more. So we have here, boom, rejection block, boom, there we go. So we have change of state up, change of state down, change of state up, change of state down. That makes it a high liquidity dealing range. So when price takes out its low, there, when it comes back into this rejection block, that is your opportunity to go long. Boom. Okay, that is literally your opportunity to go long. It is as simple as that. This is your supposed turtle soup. Now, how do I pair this? Or what could I have paired this with? Here, what is price going into? Let's check. Check the 4 hour. 4 hour, what can we see? Let's take a look. Look to the left. What do we have? We have the remainder of the fair value gap. There. What about the daily? Am I missing something there? Same thing. Actually, you can refine it here. And that is your POI for this turtle soup. Okay. And what, or rather how, could I project this move Literally, how can I project this move? Look, this is also stacked liquidity, stacked sell side, right? Find the swing high that led to price taking out this stacked liquidity pool. This one. Do that. And this one standard deviation, two standard deviations, that is your terminus. Okay, you can go one step further because this is definitely a higher time frame move. Check the 15-minute and see if it is indeed a stacked liquidity pool. Yes. So what can you do? That one standard deviation, two standard deviation, it lines up with what? This stacked buy side pool here. And you can check if it works out or not. It's a weekend, highly unlikely. But while we've got the momentum going for us, it should be able to come here. Especially because the New York session bias for today is bullish. And let me check. The PM session bias for the weekend should also be bullish. Yep, it is bullish actually. It should go all the way up. Okay, so that's it. I hope you guys found this insightful. Okay, the sign up for the one-on-one mentorship is down below. There are 2 spots available. And if you don't know what it entails, you feel free to send me a message on Telegram at Sean Trades Effects. There are a lot of fake accounts, so make sure that it is Sean D Trades Effects, no underscore, no at, no nothing, just Sean D Trades Effects. And if you are interested in the bias generator and the 14-day free trial, trust me, guys, it's worth it. If you are in the My Traders Lab Discord, you will see that I haven't had a failed call over the last 2 weeks, I think. Yeah, because that's when I actually started giving it out for free for the time being. Okay, so with that said, I'll see you guys in the next one. Good luck and good trading. Bye-bye.